I want to talk about cryptocurrencies for just a second and then come back to the silver. This is one of the indicators that the central banks and the governments are actually losing control of the sound money. Simply put, because a rising gold price is an indication of a failing currency. And governments don't want you to understand that this is going to zero. It's not whether or not they still have dollars after this. There'll be different kinds of dollars like there were in the past. What we're really seeing is, how did they get adoption of cryptocurrencies? They allowed it to fly, because when the prices go up, eyes start to pay attention. The current fundamental value of 1 ounce of silver, even with the spot market at $91, is around $2,000. So it's still severely undervalued from the pressure. And you see, there's a finite amount of gold, there's a finite amount of silver. That's it, period. So when you have those supply demand imbalances, you're going to get this kind of behavior in the digital market.
According to sound money advocate Lynette Zang, rising gold prices signal failing fiat currencies and declining central bank control. Governments encouraged cryptocurrency adoption by allowing prices to surge, diverting attention from gold and silver as true stores of value. However, digital assets cannot replace the finite nature of physical precious metals. Despite volatile spot pricing, silver remains deeply undervalued, with its fundamental value far exceeding current market levels. With limited supplies of gold and silver and growing global demand, supply-demand imbalances continue to intensify. As monetary systems evolve, precious metals stand as enduring hedges against currency debasement and systemic financial instability. Now, we present the clips from Lynette Zang interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
I want to talk about cryptocurrencies for just a second and then come back to the silver, because this is one of the indicators that the central banks and the governments are actually losing control of the sound money. Simply put, because a rising gold price is an indication of a failing currency. And governments don't want you to understand that this is going to zero. It's not whether or not they still have dollars after this. There'll be different kinds of dollars like there were in the past. But what we're really seeing is, how did they get adoption of cryptocurrencies? They allowed it to fly, right? Because when the prices go up, eyes start to pay attention. So that's how they got that adoption, which is what they needed, to do is suppress gold and silver as sound money, because they want you to think that this is digital gold. Look at how much like that it looks, right? There's a reason why they do that. But now, because central bankers and governments and Wall Street even appear to be losing control of these spot markets, but this didn't just happen with silver's rise. You know, this started last January, a year ago, when they started shipping over the physical gold and silver to the U.S., which is primarily just a contract market. And then that gold and silver was actually delivered out, which created a lot of shortages at the London bullion market. And I was just looking at that data, and they've recouped some of that gold and silver in their reserves, but the Bank of England hasn't. And they shipped a lot of the gold that they were holding over to the US, and that gold was delivered out. Well, whose gold was that? That's really the question. It wasn't the Bank of England's gold, because they basically don't have any gold. It was the gold, it had to be. It was the gold that they're holding in storage for other countries. They can get away with it as long as there's not a repatriation of that gold, as long as those countries don't say, hey, ship us your gold, right? We've seen this act before, where they go, okay, we're going to ship you the gold, but it's going to take us 7 years to do it, because they don't have it. But again, we are so much further along right now than we were inside of the trend when it happened back in, was that either 2018? I think it was 2018 when India denominated 85% of their currency. There was a big, huge rush for repatriation, I think, right around that period of time. But again, we had more room to manipulate and maneuver. Maybe they're going to come up with something that I haven't thought of yet. I'm going to be honest. I didn't see QE, right? A lot of people did not see that, but what do they have left? And right now you look on the purchasing power chart, or you look on the chart, because you were talking about the debt earlier. Have you seen the chart from the Federal Reserve Education Department on the interest on the debt? Because it's like this.
Yeah. It's
scary, because we were already compounding interest back when I did a study in 2009 at 13 trillion in debt. And by the way, when you're talking about 38 trillion, that's just what they're admitting to. I'm telling you, there's a whole lot more debt. And then there's a whole lot, even more than that, of those bets on top of those debts and the interest rates and all sorts of other things. I mean, this next crisis, maybe I'm wrong and time is going to tell, but this next crisis is not going to be able to be papered over. If I remember correctly, I could be wrong, but I think that spot silver was about 72% away from its 200-day moving average. Technically, 10% is considered a lot. So that is extreme. What I'd like to point out for people, though, is that does not mean that it's overvalued. Mm-hmm. It just means that it moved too far, too fast on the contract. The current fundamental value of 1 ounce of silver, even with the spot market at $91, is around $2,000. So it's still severely undervalued from the pressure. And you see, there's a finite amount of gold. There's a finite amount of silver. That's it, period. So when you have those supply demand imbalances, you're going to get this kind of behavior in the digital market. Having said that, there's an infinite supply of contracts.
Growing volatility in cryptocurrencies and precious metal signals weakening central bank control over global monetary systems. Rising gold prices historically indicate failing fiat currencies, while governments encouraged crypto adoption by allowing rapid price appreciation and branding it as digital gold. Meanwhile, physical gold and silver shortages have emerged as large quantities were shipped to U.S. contract markets and delivered out, stressing London bullion reserves. Despite sharp moves in spot silver prices, the metal remains fundamentally undervalued due to finite supply and relentless industrial demand. With debt levels surging and paper contracts multiplying infinitely, physical gold and silver continue to expose cracks in the financial system. Let's get back to the interview.
Wall Street or the bullion banks or that, and really was JP Morgan's statement of selling all of that silver about suppressing the price. Maybe it was about profit taking, because I don't really think they understand money. Does that make sense? Why is the price up where it is when they can create an unlimited amount of gold and silver that does not nor ever has to exist? Because people are demanding the physical. And there's no real substitute for the physical properties in both gold and silver. They've tried so many times, and they'll continue to try it. I'm not saying they can't crack it, because technology is technology, but up to this point, they have never figured out in a lab how to duplicate all of the properties that gold and silver have in use. And this is such a critically important piece of it, and why both gold and silver are above the central bankers and above the governments. Because to your point, all of these manufacturers, or they're building out all of the new infrastructure for the generation of energy and solar. And I mean, I just did a piece where I had like a laundry list of places and entities that use physical gold and physical silver. So when we're looking at a currency life cycle issue, I mean, I know I'm not popular when I say this stuff, but where is this used? One place. Where is this used? One place. So when demand goes away from these entities, this form of whatever money, cryptocurrencies, fiat money, then boom, they're gone. But with gold and silver, sound money, I'll do a count. If I had to guess, I would have to say that I probably had about 40 or 50 different places where gold was used and again, where silver was used. And I could send you that list. And it's probably not as comprehensive as it could or should be, but it's used in every single sector of the global economy, whether it's a little bit or it's more, it doesn't matter. You're looking at a full quiver of demand. And this is a fight for our lives. So what do you want when you're going into this fight? Do you want a penknife or do you want a bazooka? Because gold and silver are your bazooka. And that penknife will do no good if you're sitting in dollars or any assets that can only be converted back into dollars. I don't care if they call it a stable coin. I don't care if they call it a hoochie cooch. I don't care what they call it. If you can only convert it into dollars, then you got to look at the purchasing power and the value of the dollar. And it doesn't matter if the dollar is weaker or stronger relative to other fiat or government debt-based currencies. They're all going away. And that's why we have to go into a new system. And that is something that takes a minute, but it started, well, probably 1996 with the How to Make a Mint, and then 2009 when they started with Bitcoin. I mean, you know, they're shifting us into a new system and we have to go to a new system. I'm just really wanting us to have a sound money as part of that new system so that we can no longer, the public, meaning we, that's who we is, that the public can no longer be as easily abused as we've been over all these years. We have to take our power back. We have to be able to control what the governments do. Not the governments control what the public does. It's supposed to be the opposite. You could also see that the support level on that gold-silver ratio is about 50. And when I did it just the other day, we were at 56. So what I'm looking to see is whether it bounces off that 50-to-1 ratio or if it breaks below it. If it breaks below it, then what I would expect to see is a test of the somewhere in the vicinity of the historic average. If it bounces off of that, there's also a breakout period and on a top resistance level. So I would be looking at the ratio to go up and test that. And if it breaks through, that's different as well. But what I want people to really know from a historic perspective is that and you're kind of talking about that. We're just looking at two different charts to see it, right? Is that we're in the phase right now where that is shrinking. I do personally believe, because I've seen this so many times studying all of those currencies, that once we hit the obvious hyperinflationary stage, then that widens again. So personally, when I decide, do I want to buy gold or do I want to buy silver? What I look at first is what I'm trying to accomplish, because this is not a trade to me. I'm not going to convert this into dollars again unless I'm ready to convert it into some income producing asset.
Rising gold and silver prices challenge the long-held dominance of Wall Street, bullion banks, and fiat currencies. Despite the ability to create unlimited paper contracts, demand for physical gold and silver continues to grow because their unique properties cannot be replicated in laboratories. Used across energy, technology, infrastructure, and manufacturing, precious metals maintain broad, irreplaceable demand. As confidence fades in fiat money, cryptocurrencies, and dollar-based assets, gold and silver stand above governments as true sound money. With the gold-silver ratio tightening and systemic risk increasing, physical precious metals offer enduring value in a transitioning global monetary system. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.